Hey, good Friday, everybody. Doc Severson with you here today, Friday, the 26th of June. Welcome to Trade School here at ReadySetCrypto. It's a Friday, which means everybody's in a good mood, and the market's recovering quite a bit today. We'll see whether or not we'll do some analysis today to see whether or not there's anything behind this and kind of frame in how we expect to analyze the price action going forward. Good to see you folks on board. Got a few people in the room here today. Probably have several more actually watching this on replay later on. I get it. That's no problem. So welcome aboard for you as well to pretend that this is live. And we'll try to do the best to make sure that this stays relevant regardless of what happens today. So, very interesting week, right? Go back to where we were a week ago where I was jumping around in front of you guys saying, holy smokes, we got a big weekend coming up. Well, that's kind of what happened, isn't it? I mean, sometimes you'll see things in the charts that sort of make you wake up and go, wow, I think we're about to see something big here. Now, you never know what's going to happen in the future. Some of this is to some degree experience. Some of it is a little bit of, I don't know, spider sense, whatever you want to call it. But what happens is it's patterns in life. You see patterns all the time in life. You see, when you see somebody weaving in front of you driving at night, that's a pattern and you've seen it before. And maybe you say, this person's gonna hit somebody before long. And so you learn to slowly back away. You see it before with people's behavior, where you see aggressive behavior and you recognize patterns with things like that, and you learn to back away or maybe engage a little further, right? So, hey, Dom, good to see you on board. Thank you for saying hello. Good to hear that everything's working here. Otherwise, I never know. I feel like I'm just talking to myself. So you never know how these things are going to go. Okay, so pattern recognition is kind of what we do. And I know it's a big deal because a lot of people will say, well, what's going to happen next? And I will always say, I don't know. I don't know what's going to happen next. But what we can do is we can look for patterns. We can look for things that match previous behavior because the market tends to kind of repeat from time to time. When we see parabolic moves, we're going to see a hairy back on the other side. It just happens, right? Parabolic moves don't mean that it's just going to keep going on forever. There's a limit to everything. However, one of the most frustrating things for most people is most of the gains will come right at the very end. I mean, look what happened on Wednesday when we were doing a live session. It was just going crazy. And all of a sudden, right in the middle of our live session, it just started to die like that. And a lot of that was due to Coinbase and uncertainty, like, oh no, exchanges are crashing. I got to get my coins out right now. And everybody, does a knee-jerk reaction. And this is how herd behavior operates. And so there's a lot of things that you'll understand around herd behavior. The more you understand herd psychology, herd behavior, how the crowd operates, and the more that you can separate yourself from the crowd is going to be your delineation between yourself and crowd behavior will determine how successful you can be as an investor. And, quite honestly, I don't think you're going to hear that too many other places. And it's, because if you read a lot of other places, it's like, hey, just follow us and you'll be successful, or just do these things and you'll be successful. But there's a lot to it. There's a lot to it. And the reason why is because everything that'll make you successful as an investor flies right in the face of all the experience that generally you get through life, which is that risk is a bad thing, right? Just do the same thing as everybody else and you'll be okay. That is definitely not the case in investing, right? So let's get into some things today. I got a number of things to share with you today. Okay, I'll get it right eventually. So one of the first things I want to do is, all right, let's get rid of me, enough about me, and let's go over to Z chart. Okay, so what I have here is I have a chart of BTC. Now, BTC is the Chicago Mercantile Exchange futures contract, which is the really big one. It's not the XBT, which is about to go away from the CBOE, or maybe it has gone away. As far as I know, nobody was really trading it anyway, and it's not going to be in a huge dent when it goes away. But this is one that does have a little bit of volume, and it's too big for retail investors. One contract is worth the leverage of 5 BTC. So it's huge. And so there's been some talk in the Omnia group about gaps and things like that. And what I want to show you is the gaps that occur from, I think you should be able to see this. What I want to show you is the gaps that occur from the weekend. So these futures stop trading on Friday afternoon, Eastern time or Central time, whatever you want to call it, and they don't pick up again until Sunday night. So this is the traditional U.S. futures exchange. This is the way that they've done it. They trade about 23 hours a day, 23 plus hours a day during the week, during the 5.5 days that they're open. Over the weekends, nothing happens. And this is the old school way of trading and investing based on the stock market. I think this is I think this has to change. I think every market, crypto's setting the tone here. Crypto is open 24/7. And I think what we're seeing is some of the exchanges have difficulty keeping up with that because you have no maintenance window. There's no way that you can really stay in front of things. There's no way you can stay in front of traffic unless you're able to scale on the fly. And for any of those of you out there in IT, you know how difficult that is to do. So this is an extremely difficult space to get your toes wet in. And, U.S. exchanges, traditional futures exchanges have been doing it, 2 days off on Saturday and most of Sunday for a long time so they can stay ahead of this stuff. But here are gaps. Let's talk about gaps for a second. So what I've got there is I've just got a single day chart, single price chart here. And so you can see some of these gaps have been pretty big. So it's fun when you can take out the CME, right? So you gap over the weekend and you put extreme pressure on those that have positions, Bitcoin positions. Maybe they were short and the market starts ripping higher and all of a sudden they are well underwater by the time the market opens up on Sunday night. But you'll notice that this gap, really there's no gaps before this point. We really didn't have much volatility. This move here, this is the first move that started off the bull market in early April. And this happened during trading hours. It happened during the week, so there was no gap there. Here is a Sunday gap that happened in mid-May. Here's another one. So this one is closed. Notice how this one got closed here. Price came down. This was that little mini crash that we had. I forget exactly what drove this thing. I forget whether it was the Tether thing or there was some exchange that Binance had a problem or something like that. Or maybe it was when Binance had announced that they were no longer going to service U.S. customers going forward. I don't know. I don't know which one it was. Doesn't really matter. It's just the price doing what it's doing. Okay, that gap was filled. And generally what I want to see is for a gap filled, I want to see the price coming down to the closing value of that. Gap filled, check. Here's another gap that occurred. And this is in the latter part of May. And remember, we had 3-day weekend there because that ties in with the Memorial Day holiday. And that gap was filled again, too. Here is a gap right here from mid-June, has not been filled yet. Here's a gap from this week. No, I'm sorry. Take that back. This is from this weekend. This weekend, whatever, or last weekend, sorry. I'll get it right eventually. This gap is not filled yet. So even though today or yesterday's volatility was very close to getting it down to 10,000, notice what happened down as we closed in on 10,000. A lot of buying interest down there, wasn't it? There's a lot of people that got left at the altar down at 10,000 as the price broke above it. Right? I'll get it right eventually. The price broke above that level and left everybody over the weekend, right? So that was a lot of big weekend breakout. But so far, there's demand down there at 10,000. Interesting. Okay. So we'll talk more about this level later because I've been spending some time lately trying to figure out, like what are the value areas that we can just put a limit order down here. So we'll get to that in a few minutes. Okay. Yeah, dinosaurs, big time. Dom, think Charlie Munger did a great lecture about crowd behavior being one of the most important things to learn in trading. Okay, well, good. Well, Charlie did something positive then, because the other thing that Charlie and his partner have been going on and on about is how terrible Bitcoin is. So far, at some point they're going to have to eat some crow. I think those two were also very dismissive of the internet once upon a time, maybe 25 years ago. Weren't we all at some point like, what are we going to do with it? Just check the weather all day? How little did we know at the time? Somebody figured it out though. Okay, so those are gaps. So this may be something, I don't know if you're looking for extreme value. So let's kind of shift over into value positions. So a lot of people, right? A lot of people missed out on this move. Okay. That's okay. And a lot of people have missed out on the move ever since this point. And they're looking for a way to get on board this thing. Well, first of all, you got to understand that any entry that you take from here, not going to feel very good, is it? Buying yesterday's dip was like, oh, okay. Is this going to work out? Are you guys playing cards? That kind of thing. They never feel good, do they? And so this is why a lot of people don't do them. Everybody says, oh, you just got to buy the dip. And then when a time comes to buy a dip that is dropping 400 points, you're like, I think I'll just sit back and watch this swing. I want some confirmation. And what that means is that you're scared, number one, which is all right. But number two, it also means that your position that you're proposing to put on could be too big. Could be too big. Because if you're scared about the outcome of that, you will not make the right decision when it comes to investing it properly. So find ways to scale down your position. You don't have to back up the truck, right? You don't have to get it perfectly right. You're just looking for ways to help drop your cost basis on what you're entering. So if you're trying to do this by feel, it's going to be very difficult. If you're going to do this through a system, so a DCA, dollar cost averaging, can be done through a system where every Sunday at a specific time, for example, or every week at a specific time, or every month at a specific time, you go doink, and you put a contribution into your account and you buy some more Satoshis, right? So that's one way to do it, is just through time. Another way to do it is technically, either based on price levels, or you're going to wait for a certain oscillator to hit a certain oversold level, and then doink, you add your contribution to it. So those are a couple of different ways. Now, we can also look at this just from a technical price discovery level. Let's clean this up here. So some of the things I've talked about lately are, this is a swing trade. Okay, so let's get off of, I'm going to get off of here. Let's go over to our 51 minute. How did that happen? I now have a 51 minute chart on here. So I don't know what relevance that has. Let's get rid of our RSI Laguerre. We don't need studies on here. All we need to do is to look at the price. And let me get a version of Bitcoin up that's up here without all the fun. So let me remove some of these things here. We're getting there eventually. Okay. All I want is just price and volume on this thing. That's it. Okay, so I'm just going to X this guy out of there. Goodbye. There we go. All right, so one of the things that I have talked about lately is swing trades. Or not swing trades, swing tests. Sorry, keep saying that. This is a weekly swing. Here's the weekly pullback. Here's the breakout through that level, which is about 9,200. Next consolidation, and this is the next swing up. Swing test is typically when we're going to retest that swing from above. So you break into a new high, you pull back, you break through it. Former resistance becomes new support. So this is where the concept of former resistance becomes new support. And so we may have a retest of this level down here. So that's 9,200. That's a pretty significant pullback. Now, does that also map out with any kind of a fib retracement? So let's look at this from a couple of different ways. First of all, let's draw fibs from different time frames. So if we look at this from just the weekly time frame, okay, so there's the weekly chart. Let's draw a fib on here from the weekly chart perspective, and let's see what that would make. Okay, so we're going to take this from what I consider to be the bottom of this swing, which is down in this area. Doesn't have to be exactly perfect. And there we go. There's a 38.2, which is at 9,800. 50%, which is at 8,600, or we could go as low as 73.65, which is very likely. So what this also tells you guys is that for those of you that are looking for a retest of 6,500, could it happen? Yes, it could happen. Is it likely to happen? No, it's not very likely to happen. It certainly would represent a great value point, but I think this to me represents something that is more of nostalgia than anything else. This would be a nostalgic price level of, hey, wait for me, or I feel bad that I didn't get on board back then, and so I regret that. So I'm going to insist that the price go all the way back down to 6,500 to get me on board. So unless there's a different form of analysis that you're using, so I think their Checkmate may have been using some kind of on-chain value that referred to that, which is totally different. I totally respect that. That's cool. But if you're looking at this going, well, it's got to come down to 6,500 because there's a gap that needs to be filled. First of all, there's no gaps down there, unless you're talking about the one that's down at the very, very, very bottom, which I doubt is going to get filled. Why on earth would it come all the way back down there again? Bitcoin's trying to tell you something right now. Price discovery is telling you that accumulation is the mode of the day right now. It's not, we are gone past this character. We are no longer selling. So those of you trying to sell you on the fact that Bitcoin is heading down to 1,300 again, or whatever it is, I believe are either delusional or they have a secondary agenda. I don't know what it is. Okay, so right now we are definitely in a bear market. This is, or I'm sorry, a bull market. This is not a bear market rally. Bear market rallies look like this. This is what bear market rallies look like. We had our capitulation. This is not the form that I was looking for. Be that as it may, the market pivoted, and since that point, look at the volume. The volume is telling you the story. We're heading higher. So far. Nice gain for today, up 6%. So looking at the weekly swing, I think, I mean, to me, the very lowest that this thing could go would be somewhere around 7,300. Now we've seen this story before. Let's go over to this on the weekly chart. This is, we've seen this picture before, haven't we? So notice that when we made our initial swing off of the bear market back in, what is this, 2015? Notice what happened here. I mean, this was a pretty big move, and it gave back a big chunk of it. Let's go back to the daily chart and look at that. So that has happened before. If I can find it, it's all the way back here. All right, bear with me a minute here. We'll get to. Okay, so this is what happened. So we had this big swing here. Now notice what happened to that. We'll do the fib retracements again. We'll start the swing here. We'll go all the way up to the top. And notice how it went and actually undercut the 61.8% retracement of that entire swing. So that's kind of a small weekly swing, but, you know, notice that it can happen. And there's your swing test. And then she's gone. Say goodbye. All right, so I'm going to reset this chart. Go back to today. So it could happen. We could see something, you know, if we count this to be the entire swing here, we actually could see something coming all the way back down to, and I don't have it set correctly here at the 0 mark. I've got the 0 mark set for this swing. So if we take this all the way back to here, yeah, we could see something down here at 7,300, which would be considered to be support again, and this would be a high value node on the market profile. I just think it's unlikely to do that. So I think it's more likely that we have something, if we look at the recent swing, which is down here. Okay, so it really began somewhere around 7,500. I think that we're more than likely going to see something. This to me is the highest probability, is that we eventually at some point, now maybe we print a lower high and then roll over again, but coming down to test some area that's just a slight undercut of 10,000, or maybe even as far down here as the swing test, which is at about 9,000. So 9 to 10,000, this to me is the value area here, which is, I think, going to be the opportunity to add to your position. So that's my thought on this. I could be completely and totally wrong. I think it is nostalgic to think that the price may come down as far as 6,500. If you're using just standard technical analysis, I don't think it has to do that. There's also people that have talked about the notion of that this is still a bear market rally because every bear market has a retest to the bottom. And I don't recall if I went through this last week, but if you want to see an example of why that's wrong, let's go out to the monthly chart, and I'm going to go out to the S&P 500. So if there's a market that can give you a sense of what happens and what doesn't happen, and this is a $30 trillion market right now. Here's the bear market that we had. This is a financial crisis that we had in 2008. It began in 2007. So this thing prints a lower high, rolls over, screams down, and by this point, everybody was just numb. By the point we got to March of 2009, people were just numb. Nobody was looking for anything at all. And quite honestly, everybody was thinking that the S&P was going to go down to 200. So it bottomed out at 666 for those of you that are conspiracy theorists, right? Great number for that. But notice how it just pivoted and just started working higher. Now, it did offer a higher low that's in here, but what I want you to notice is that there's no retest of that. There's no retest of that level. And quite honestly, I was sitting there through this whole rally like, well, it's going to bend over and retest. It's going to fall over and retest. It's going to fall over and I guess it's not. And then even when we got up to this level in the summer of, was that the summer of 2009? No, that was actually 2010 when that occurred. That's at the point where Bernanke said, hey, guess what? We're going to print money. This is where he announced quantitative easing, and the market just took off from there. Didn't have a chance. So there's sometimes external forces that create this stuff. So there are no laws that are out there in technical analysis where it's like there's some Bible somewhere, like in the Star Wars movie, it's like some cave where like a set of books are, where it's like, thou shalt, operate by these rules. Look, you're trying to interpret crowd behavior. How are you supposed to know whether something needs to be retested or not? You're never going to know that. So here's an example of where a bear market, the worst bear market in a generation, did not retest. This one did back here in 2002, 2003. This is what everybody was using as case history because we don't have that many true bear markets. Now what we have is horizontal bear markets in the equity markets. They don't drop anymore because of this implied Fed put. Now this eventually will cease and desist. We will have a vertical bear, but you can see here's another example of one where there's no retest at the bottom. It just takes off because it's the eternal search for yield. So let's go back to our friend, Mr. Bitcoin, and we'll go back to just the daily chart here. So, it's a bull market, and you're seeing just from range expansion, you're seeing range contraction. So what I'm thinking that we're going to get in the near term is when we get into these levels of exhaustion, typically, the first bounce will probably lead to some form of lower high. We'll come down to here, and then I think what you'll see and you can mark me on this if you want, mark this date, is I think you'll see a great big pennant pattern or symmetrical triangle form. This is very, very common. There's three ways that a market can recover from exhaustion. The first way is just horizontal price action like that. That is the most common. The secondary method, which is the fastest, is actually to go back down. But I don't see us doing that. I see the dips being bought. I see people missing out on this thing, and every time it goes down into a value area, the dips are going to get bought. But it may not have enough energy to necessarily break out. So this is why we typically get stuff like this. And the third way is for it to just kind of grind higher until it's restored, which takes the longest time. Arshad, can you show upper resistance levels? How long does this leg can take? Okay, so I went into this some time ago, and this is kind of controversial because this is what technical analysts do. And I'm going to pull this down to a weekly chart and expand this out a little bit better because I think you'll see it best on here. Okay, so there's plenty of TA guys that are out there saying, looking at this and going, there's a level of resistance. Wait till the price gets up to there. It's going to have difficulty getting through that level. Well, no. Okay, here's a level of resistance. Wait till the price gets up to there. Boy, it's gonna get smacked right back down at that level. No. All right, then they go, here's the next level of resistance. Wait till the price gets up to there. It's going to get smacked right back down. No. Okay, so the next one is going to be up here at 17,000. So you can keep playing this game, but what these people don't understand is, what does it mean to have overhead resistance? What does overhead supply really mean? Okay, so overhead supply means that there's more sellers than buyers up here. So that implies there's more sellers than buyers up here. And you guys have seen these, you've seen these depth of market graphs, right? Where you can see, you know, stuff like this set up, and here's the current price, and here's the buyers that want to get on board, and here's the sellers and those kind of things. So what this implies is that you've got some kind of really stacked overhead supply that's up here, which may be incredibly vertical, right? So just super, super bunch of supply that if you go any further, you're going to just never chew through that overhead supply. Now, why would people do that? Why would people choose to have overhead supply? There's several reasons. One, they could just be outright bears. I know a number of bears that's the only direction that they trade is to the downside. Number one. Number two, it could be people with limit orders that want, they're bulls, but they want to sell at a, what's the word for it? I guess just a reasonable target, right? So it's just a common target, just like, well, it makes sense to sell up there because probably it's going to have resistance and may not be able to get through there. So I want to make sure I take my profits and don't have any drama beyond it. Right? So you've either got bears or you got people taking profits. You know, it's going to be one of those two things. But the third thing is, what about overhead supply implies that somehow these people that went long back there just want to get whole again. They're like, they immediately regret it because the price is going down there. So what they do is they put up limit orders, good till cancel limit orders, GTC. They went long up here just to sell out the position. So that's the third type of limit order that could be sitting up there. Just make the pain go away, make the pain go away. So are you telling me that these people have been holding all the way through this and are still dedicated to selling out the position? Like, if it comes up to 12,000, I just want to sell. Make the pain go away. No, that would be the case if it was maybe a month or two, but people are not going to hold through this. They've already puked out their hand by now. So we get used to, and I, certainly was in this case as well myself when we see these sort of like overhead spikes and pivots and things like that, which is what the swing test is based off, right? So these are nothing more than swing tests to the downside. And I don't believe in that. So I did a video like a month or 6 weeks ago saying, forget about these levels. So what is the overhead resistance? As far as I'm concerned, we may get some kind of reaction up at 20,000 at some point eventually, and maybe 14,000. But did we really react all that much at the former highs at 9,000? No. When accumulation is going on like this, people love to identify these obvious areas of overhead supply and just plow through them and use them as an acceleration, almost like the side booster rockets on a Falcon 9, right? Let's light those up. Let's light up the shorts, punch them through there, and we're going to be able to coast on through. We're going to be able to push on past max Q and past that resistance. And this is what's happening in today's market. So if you want me to look at overhead resistance, I cannot quantify it right now. Really, overhead resistance comes in more of a sideways to choppy market where that supply builds up from former longs that just want to bail out, right? So obvious landing areas. Oh, let's see. The old ones are irrelevant. Okay, so you're buying that. What are the new ones? Well, there is no real new. I mean, other than maybe 14,000 being the former high, I wouldn't worry about it though. Too many people are worried about what overhead supply is. I mean, and don't turn the question around to say, where should I short this thing? Because you're going to be going counter trend. So what I'm always encouraging people to do is to go with the trend. Find a way, trade in the direction of the anchor chart swing, right? Trade in the direction. So how relevant is depth of market? Depth of market, I believe, is, look, you're going to see pretty much the same thing no matter what you look at. And a lot of these things get shifted around. You see a big number out there, and all of a sudden, as soon as the price gets up near there, it's like, whoop, just kidding. Right? So I don't look at it all that much, but I was just drawing this to imply that that's what, huge overhead supply, you can tell if there's huge overhead supply because it's, just orders of magnitude larger from one side of the ledger to another. Can you short S&P with crypto yet? I don't think so, and I'm not sure why you would want to do that. Perhaps you can explain why you're looking to do that. Now, maybe at some point they'll have a coin which is some kind of an S&P token, right? We'll have a reverse ETF, right? Which is the S&P coin or something like that. If you want to short the S&P, you use futures on the S&P. I don't know why you'd want to do that. I don't think that there's a good arbitrage mechanism yet in crypto to be able to track what's happening on the S&P. We're having a tough enough time doing it the other way. Okay, so let's so I've kind of gone through this a little bit. I've told you what landing spots to look for, and those are just suggestions. I'm not saying that those are the only ones that are out there. Everybody's going to have a different answer to them. And I'm always going to encourage you guys to follow your own system. There is not one right or wrong system that's out there. The only right system is the one that you work on and you dedicate yourself to, and you take the signals without exception when they show up. Because what happens from so many of us is that we're running around just, from one thing to another, to another, to another. We're looking for the Holy Grail, and we become a jack of all trades and a master of none. And we're looking for that perfect system. And the longer that you run around and bounce around like this, the more losses that you'll take because you're not going to fully commit to that system. And typically you'll wait until that system entry feels good, which is that's a death knell right there. That's a signal that you're not going to make any money until you reverse that. You've got to find the ways to get into trades that feel bad. Oh, okay. So that's class is saying that you can actually trade S&P 500 on Prime XBT. Awesome. So that's cool. So you fund the account with BTC and you actually can trade against that. That's cool. I didn't know that. Can't know everything. Where would you put it? Right. Okay, so let's move over to, if I can find it here, the triple array. So this is part of the futures class. So this is what I taught in the futures class, is just the triple array. And what I've got here is this is what I call the 1X, which is a 12-minute chart. This is a 12-minute chart. And I wish I had ticks on here, but we don't have ticks in TradingView, so I have to use minute charts. But they're acceptable. They work. Here's the 60-minute chart. 60-minute chart, and this is what we call 5X. This is 5 times larger than the signal chart. This is the signal. So this is where we're taking our signals from, our entries points from. 5X, and then we have 25X up here, which is the 5-hour chart. 25X 5-hour chart. So what I like to do is I like to trade in the direction of the anchor chart swing. Which is the anchor chart swing? Well, we actually have, if we want to go to the bigger anchor chart, we have Heikin-Ashi candles, which are starting to paint green. And we've got 3 hours of or 3 candles of those in a row. So we've got the better part of 15 hours of green candles there. And so it's a trend indicator. So regardless of whether the actual price is going up or down, this is what the Heikin-Ashi does. It's sort of a filter on the candlesticks to kind of keep you in the direction of the trend. It's not the best for catching the exact reversal. This is why I use normal candlesticks over here. But I'll use Heikin-Ashi on this guy over here. And this is typically what it's real simple. What I want on this chart on the left-hand side is trade in the direction of those candles. Now, if I move over to the middle chart here, so move over to the middle chart, which is the 5X, what I want to do is I want to trade in, this is the anchor chart that I'm using, trade in the direction of the swing. So here's a trend, and I want to trade in the direction of that swing, which in many times can be approximated by the RSI direction. So as long as the RSI has at least broken above, has hooked above there, I want to be going long. And as long as it stays up here and in this zone, if it starts to drop out of it, then I want to back away from that. So all I'm seeing on here is long. So I'm seeing long here. So these are just filters, guys. These are filters. And I also don't like to trade against an exhaustion signal on here. I don't want to take this too deep in here. So I will look for something that's definitely above like 45 or so. 45 energy on the 5X chart. And then from there, it's simply a matter of if that's good, and if that's good, then I'm looking for my actual entry point here. And look at the volatility that we're seeing off of the hook that we had this morning. So we had a hook this morning, which came in probably about 11,700. And look at this, within 24 minutes, 2 candles, it's already up 200 bucks. So if you're on a position like Prime XBT, if you're using something like a Prime XBT, which is 100-to-1 leverage, you're risking, if you're leveraging 1 BTC, your initial margin on the position is going to be about $117, right? So what that means is that you have to have at least $117 in your account just to set up the position. And if it moves against you at all, they're going to shut you down. They're going to shut down that position because you're going to take a margin call. So make sure you're trading with several times that amount of capital in your account. If you're going to leverage at 1 BTC, you don't have to leverage at 1 BTC. You can leverage at a fraction of that if you want to, but just to keep the math simple here. So on a position where you're leveraging $117, you can make 200 on there. So you're doing well over, and that's just one little swing. You could hold on to this thing if you wanted to, although you can see that it actually went negative a few minutes later. But that's your job in here, is to get in, get your fair share, get out. Your job is to stay in cash most of the time. Dom, what's a good way to measure the size of a trailing stop loss when going to sleep in a runaway market? All right, so what you're saying is that you want an active position, but at the same time you want to sleep. So this is like an overnight thing for you. I don't do that much of it, right? So if I'm holding stuff, if I've got a swing trade, that could go for several days, and that stop is way down there, right? And so typically I'm not like trying to day trade overnight and hold on to a position. So my job is to be flat with, like if I were trading Prime XBT or Deribit or something like that with futures, I don't really want to hold futures overnight because a lot of times there's holding costs with those. There's going to be, interest charges and holding costs with that kind of stuff, especially with a perpetual contract. So I don't like to do that. My job with a futures contract is to get in and get out. So I won't hold them overnight. So if you're asking more about swing trades, then it depends on what time frame that you're using. Like if I was swinging this one, if I was swinging this 12-minute chart, then the combination of this swing test here at 11,600, as well as the former lows just below that, means that I would probably be putting a stop somewhere down here, maybe at 11,500. So if I was swinging this thing and looking for that, then that's kind of where I would put my stop. Yeah, the holding costs are getting pricey now because it's percentage based. Okay, so, all right, we've gone for, we're closing in about 45 minutes here. Let me know if there's any, so we've gone through pretty much three things. We talked about gaps in the US BTC, we love to punish Chicago. We love to make them sweat it out over the weekend. The market loves to do this. Bitcoin market loves to give the extended middle finger to Chicago. And so we create these gaps, but how often are they closed? So we kind of addressed that this morning. We have some open gaps below us. Typically they're closed, but we've also run into more volatility than we've seen in a long time. We've really gone into parabolic range expansion. More than likely, that energy that's come into the market is not going to just dissipate anytime soon. It's like throwing a big rock into a center of a pond. Those ripples are going to be going back and forth for the better part of, it could be 30 minutes. If you walked into a totally dead quiet pond in the middle of the mountains somewhere with no wind, dropped a pebble in there, you're going to have those energy ripples going back and forth for a long, long time. And this is what we typically see with markets, is that when they do this sort of thing, when they go like that, it's, it turns into what's called a damped wave. That's what they move into. It's the old engineering stuff coming back to finally, see, Mom, I made the degree worth it, right? So this is the old engineering stuff. This is energy flow. Energy goes in and then it has to be dissipated. It doesn't immediately just go out like that. Energy comes in and it slowly gets dissipated, winds it up. Range expansion moves to range contraction, looking for the next move. How do you find the average trading volatility for setting stops? Well, you can do, things like this. You can go to, let me go to a single chart here. Now, one way of doing this is you can do the one way of doing this that I've seen is we take the average daily range, and you can, and sometimes what I will do is I will actually download this from Yahoo Finance and download it right into a spreadsheet and then do an average, right? So what is, calculate that actual daily range, what's the high, what's the low, what was the range that day, and then do like an average over the last 7 days, and divided by 10 is usually a good stop level. So if you're looking for something that's dynamic, that's a good way to do something like that. You can also do, that's going to be slightly different from the ATR, but you can also do ATR over 10 if you want. So ATR over 10, let's look at the ATR on this guy. Let's see if we have it. Average true range. What is the average true range of, like, so you're almost 900 points right now. So you'd have a 90 point stop, which is somewhat tight. So I prefer to do stops based on, but this is a good starting point, is the average daily range divided by 10, and then see whether or not that makes sense in your situation. And if you can't pull down the actual daily range on this, then you can use ATR as a proxy. I don't know exactly what the logic is behind ATR. Like, what's the true range divided by the daily range? I don't know. But I do use ATR in but sometimes it's like you don't know what's inside of an engine. You just use it, right? So ATR to me is just a relative figure for realized volatility. Okay, so good with that. Any other questions for today before we release into the weekend? Any other things that you guys want to opine on or put in front of me and ask questions about? So let's look at some of these other coins that are out there. So we have, Ethereum, it didn't get crazy to the upside. It just sort of had a nice little day. Okay, so Ripple's just, was unable to break out above the range and did a throw over, and this Ripple just can't get out of its own way. Here is Litecoin. Litecoin still hanging in there, hanging the trend line. Got a nice, between the swing test and the trend line, found some confluence of support. We have Bitcoin Cash. A lot of these are just, look, when you compare it versus Bitcoin, you're going to be disappointed. And I went into this last night. A lot of people are going, oh, it's alt season. It's alt season. And well, that's because your denominator, your basis currency is getting destroyed. And so without it moving at all, of course it's going to go up. So it's not alt season yet, guys. Yeah, good old shit coins. Okay, so that's all I have for today. Thanks for hanging out with moi for Trade School today. And if there's anything else, you guys are welcome to let me know what's going on. So thanks for hanging out, and we'll see you guys sooner or later. Take care.